Welcome, everybody. I'm so excited to have you here. On behalf of both the Adult Formation Committee and the Congregational Life Committee, we want to welcome you to this talk, very timely, from our Westminster member, David Wilcox. David is a senior fellow at the Peterson Institute for International Economics and formerly longtime staffer and section director at the Federal Reserve Board. And we're very fortunate to have him as part of our church family and to help us understand the impact of all of these things that are happening in our country right now. So we just appreciate that so much, David. I would like to start with a word of prayer. Let us pray. Be with us, Lord, as we navigate through these dark times. Lead us into the light and into better times with your loving guidance. In the hope of the resurrection, we pray through Jesus Christ our Lord. Amen. And now I'll turn it over to David.
Good morning. Thank you for being here. It's a pleasure to be with you. I look forward to being with you on some occasion when the news is better and the outlook is more hopeful. I do want to preface my remarks this morning. I'm aware that most of my material will not be reassuring about what lies ahead. I think we're in for a very difficult experience here as a country and as individuals, as families, as a community. I will end up on the final slide with a few reasons for hope. And I do want to emphasize that although the picture I will show is not a bright one, it is not one of despair either. And we will, as a country, recover from this disease and the associated economic collapse, as unprecedented as it is. And I'm going to take just a moment here to share my screen. So I'm hoping that all of you can now see my presentation. What I'm going to do is briefly review some of the main dimensions and parameters of the pandemic itself. That's, after all, the driving force behind the economic collapse that we're in the throes of at the moment. I'll give you some early indications of what the economic damage is thus far. The economic statistics are lagging the disease itself, so we don't have a lot to report thus far in terms of hard economic data. I'll then turn to some of the steps that have been taken to combat the fallout, both on the fiscal policy front. That's basically the spending bill that the Congress enacted about 2 weeks ago, and the steps taken by the Federal Reserve under the heading of monetary policy. And then I'll turn at the end to the prospects for recovery. I'm going to try to be quite relatively concise in my remarks, and the reason for that is that the part of the hour that I'm most interested in is to hear your reflections and impressions of how you're experiencing the situation, the questions that you have, and both on behalf of yourself or on behalf of others. So we're still very much in the throes of the disease phase of this situation. The United States now has, unfortunately, has overtaken the list in terms of the largest number of deaths by country. It's worth understanding, though, that other countries are hit much harder on a per capita basis. There are a handful of European countries where the per capita number of fatalities from this disease is 4 to 4.5 to even 5 times what it is thus far in the United States. It is encouraging to see that the disease curves are beginning to bend, and I'll show a slide with some data about that. So the social distancing regime that's been in force for the last several weeks is beginning to have an effect both in the United States and around the globe. One really important thing to understand about this situation is that the incidence of this economic downdraft will vary hugely, and that is true as well for the incidence of the disease. It's going to affect, for example, different races and ethnicities hugely differently. It's going to have a different effect by geographic area. I will briefly touch on the fact that the numbers are suspect everywhere, and I'll show you some documentation of that fact. We know that there are a lot of people contracting the disease. We know that there are a lot of people who are even dying from the disease, but one thing to understand is that the exact dimensions of that are really at this point unknowable. One thing I want to flag is this is not a United States concern. It's not a Western Hemisphere concern. It's truly a global concern, and for a variety of reasons. The continent of Africa is a huge future concern that has gotten far too little attention, and that, of course, is of direct relevance to the Westminster community because of the orphanage and academy that we support at Moyes Bridge. So this chart shows that the disease curves are bending, and that's very encouraging. As I mentioned, the United States now is at the top of the list in terms of total number of deaths. The data are presented in such a way that when you see each curve becoming horizontal, what that means is that the total number of deaths is flattening out. And you can tell the speed at which that's happening by looking at the slope. So a diminishing slope, such as what you see in the case, for example, of Italy, and even most clearly for India, that's what, for China, that's what we're aiming for, is a flat curve here. And clearly, important progress has been made in this regard, but we're not there yet. And there are other areas of the globe that are behind the situation of these countries. Even across the United States, the experience, as I mentioned, will differ enormously. This graph gives just two examples of that. New York State, which is shown with the red line, has been very much in the news. New York City itself has been a hotspot of the disease. And by contrast, Virginia looks, according to projections as of yesterday, as if it's going to experience a less severe form of the disease infestation, and one that's considerably lagged. So the projected peak in the number of deaths in Virginia by number of deaths per day will lag that in New York State by about 3 weeks. And obviously, as you can see from the fact that the blue line peaks at a much lower level, we're expected in Virginia to experience a much less severe form. I mentioned that the numbers themselves are subject to a lot of critique and uncertainty at this point. This graph comes from an astonishingly great piece of journalism that was performed by two reporters, Margot Sanger-Katz and Josh Katz, at the New York Times. What they did was they collected data on the number of deaths in New York City by month, and those are plotted as the red line. And so if you look to the left-hand side of the chart, I don't know if you can see my cursor, but this spike right here is the spike in deaths that occurred as a result of the 9/11 attack in New York City. what you can see in this chart, if it shows up clearly enough on your screen, is that there's a regular seasonal fluctuation in deaths by month. And so deaths regularly tend to be higher in winter months partly because I think because the incidence of flu is much higher then. But what you see way over to the right is that there's been an enormous number of spikes, enormous spike in the number of deaths in the most recent 4-week period ending April 4th. Now, what is not known, that number of 9,780 deaths is reasonably well known. What is not known is the attribution of those deaths as between coronavirus and other causes. And so the clever thing that these two reporters did was they undertook a statistical exercise to compute what the expected number of deaths would be. And so they've taken essentially exactly the same data as from the previous slide and shown it here as the actual number of deaths minus the number that would be expected for that time of year. And again, you can see over to the left the significant spike in the number of deaths at the time of the 9/11 attack. On the right, you can see that at the time this article was written, 3,350 coronavirus deaths were officially reported in the city statistics. The stark finding that these two reporters highlighted was that there were not 3,350 excess deaths, but there were 5,300 deaths. Now, the reason why I mention this is because there's been an awful lot of critique about whether the Chinese are understating their deaths. They probably are. Whether the Italians are, they probably are. This is a problem that is endemic across the globe. Nobody is immune from this particular problem. Just yesterday, my understanding is that New York revised the way that they will report their statistics, and so they added about 3,000 deaths due to corona that had previously merely been suspected coronavirus deaths. Here now I want to turn to the economic fallout. The economy is moving at a little slower clock speed than the disease itself, but we already see some indications that the recession that's in process is very sharp and very severe. I'm going to show you an indicator that the labor market has collapsed with absolutely unprecedented speed and severity. Consumer spending has dropped sharply. Some data were released just this morning by the Census Bureau that I'll show you. And the Federal Reserve Board also announced this morning that industrial production declined 5.5% in March, which is a very large monthly decline in that series. This screen shows you a measure of that pertains to unemployment insurance. If you become unemployed, you need to file an unemployment insurance claim. This is a report that you send to a state office that says, I've been laid off or I'm otherwise eligible for unemployment insurance. You need to alert the state office of that fact. And what you can see here is that at the worst of the financial crisis and the so-called Great Recession in 2009 and 10, this series peaked at just below 700,000 claims per week. And before we went into the economic version of cardiac arrest with the COVID crisis, you can see that initial claims for unemployment insurance were at a historically very low level. Now, I'm going to show on the next screen the very same data augmented to include information from the most recent 3 weeks. It'll look completely different, but it is the same underlying information. What I had to do here in order to show the observations from the most recent 3 weeks is expand the scale by more than a factor of 10 because otherwise the most recent 3 readings would have been literally off the chart. It's hard to believe that this screen reports the same underlying information as this one, but it's true. All I've done is added the most recent 3 weeks that show that cumulatively about 17 million individuals have filed claims for unemployment insurance in the past 3 weeks, and that is unprecedented by a very wide margin. Other measures of economic activity have tumbled. This chart shows one of the few indicators that we have thus far. It shows unit sales of light vehicles. Those are autos and light trucks. And as you can see, that dropped sharply in March, which is the only sort of post-COVID piece of information that we have thus far. A broader measure of household spending called retail sales that was released just this morning at 8:30 also shows a sharp drop in the preliminary estimate for March. And there's more to come undoubtedly in future months on measures like retail sales and the unemployment rate. There's been a lot of comparison about whether this experience will be similar to previous recessions or whether it will be different. And the answer is some of each. Like previous recessions, this experience is likely to involve widespread economic pain. Unfortunately, like previous recessions, that pain will not be borne evenly across the population. It will be borne disproportionately. We know from prior experience it will be borne disproportionately by persons of color. It will be borne by those with lesser educational credentials. It would be borne disproportionately by those who were already in less fortunate circumstances, in particular in the bottom half of the income distribution. And so, although there will be important effects, for example, in the Westminster community, and I know that many of you are experiencing significant economic hardship as a result of this, the concentration of economic pain will be even more severe in other quarters. There are a variety of reasons of why this experience will be unlike previous recessions. Perhaps ironically, this one began as a matter of policy choice. There was the public health imperative to arrest the spread of the virus. And the only known method for doing that in the absence of a vaccine or viral therapeutics is to engage in social distancing. What makes it really unusual is that that decision was essentially synchronized across the globe. There were differences in timing of a matter of a few weeks or even a few months, but we've never had a coordinated, synchronized adverse shock on this order of magnitude across the globe. As I've already shown, the economic cardiac arrest has taken hold with literally unprecedented speed and severity. A number of commentators have suggested that maybe we're in for a replay of the Great Depression. I firmly believe that's not the case. It's important to keep in mind that the Great Depression lasted for a decade, and only in the 1940s, particularly with the buildup of the war effort, was the recovery really firmly in place. And part of the reason for that was because at the time of the 1930s, policy ignorance was really vast compared to today. So our tools for combating the situation are not perfect, but the understanding of what the basic levers are to pull is much better than it was in the 1930s. One other and very important reason why this will not be another Great Depression is that just as there was a coordinated signal that set off the economic collapse, So there will be a signal of sorts. It'll be partial and halting, as I'll suggest later on, that the economic restart can begin to get underway. We'll talk about that more in just a minute. So what's been done thus far to combat the situation? Two broad buckets. One is fiscal policy. These are the actions that are taken by the President and the Congress. Mainly, they are embodied in the CARES Act. And here I'm going to go into a little bit of detail because I'm hoping that even if these provisions are not relevant to you, that you might be in contact with persons for whom these forms of assistance could be directly relevant. And I'm absolutely certain that within the Westminster community, there are persons who need this assistance, and perhaps you are among them. So bear with me. I'm not a financial advisor, but I want to alert you to some of the assistance that's available. First, there's the relatively widely known direct payments to households. This is the $1,200 per adult and $500 per child. It is income limited, so if your income is above the thresholds that I've shown there, the first figure is for single filers, the second figure is for a head of household, and the third figure is for married filing jointly. Then at that point, it will phase out and it will disappear entirely at higher income levels than what I've shown. It's not available to undocumented persons, but otherwise it is basically available to every person in the population. So there's an important segment of residents who live here in the United States who are not eligible for this, and it's critical to keep them in mind. But it's broadly available to everyone else. Now, here's a critical point. It's not going to go to everybody, even those who are eligible. And the reason is because the government needs to know about you in order to send you a payment. Now, the people the government already knows about in the relevant sense is those who are filing an income tax return already, or those who are receiving Social Security benefits. There is, and I've listed a website there, there is it's very exciting. There is a facility that will allow you to file the bare minimum of information that the government needs in order to send you one of these payments. And it's called www.getyourrefund.org. I just learned about it myself this morning, but there's a wide network of income tax volunteers that are to support the 7 million estimated individuals who will be eligible for this payment. So please, if you know people who do not file an income tax return or are not on Social Security benefits, please direct them to this website. A second aspect of the CARES Act is that it provided a dramatic expansion of the unemployment insurance system. 13 more weeks of eligibility were added at the regular state benefit level, and then on top of the regular state benefit, the federal government is providing an add-on of $600 per week through the end of July. So this is very important financial assistance. Importantly, it's available to lots of workers who have not previously been eligible for unemployment insurance. It's available to gig workers, to contract workers, to part-time workers, to self-employed. It's also available to those who suffered only a reduction in their paid hours. Previously, you had to be laid off to be eligible for unemployment insurance. So please know that the availability of unemployment insurance is much more widespread than previously. A third big category are loans that are convertible into grants to small businesses. This is through the PPP or Paycheck Protection Program, available to businesses with fewer than 500 employees. It is being administered through banks. You have to apply to through a bank for one of these loans. If you use the proceeds of the loan for eligible purposes, the loan will be convertible to a grant. The main requirement is that at least 75% of the loan must be used to, must be essentially passed through in the form of payroll to your workers. Finally, there's a limited amount of relief available for some mortgage holders and for some renters. Basically, the rules here are pretty complicated. I'll just focus for a moment on mortgage holders. In order to be eligible for this relief, you have to have a mortgage that's federally guaranteed, and you have to be experiencing financial hardship due to COVID. If you meet those two conditions, you're eligible for what's called forbearance. Your immediate monthly loan payments will not be forgiven, but you can essentially defer those payments for up to 180 days, and then that's renewable for another 180 days. So the fraction 180 over 180 does not equal to 1. It's up to 6 months and then another. I see that my internet connection is unstable. So the assistance is available for 6 months and then renewable at the request of the borrower for another 6 months. The Federal Reserve has been historically active and aggressive. Essentially, they've been re-implementing the playbook from the 2008-9-10 period, and then they've been aggressively moving beyond that. I think it's been just a sort of bravura display of central banking in a crisis 101. If you want a textbook example of what a central bank should do to move as aggressively as it can, given the tools made available to it by the legislature, have a look at what the Federal Reserve has done. In the interest of time, I'm going to move on and turn to the pathway forward. The first and most critical imperative is that the virus has to be defeated. There's been a lot of commentary that I think is very misplaced about the conflict between the public health imperative and the economic objective. The fact of the matter is that the economy cannot restart in a convincing and sustainable way until the virus has been brought into submission and confidence has been restored that it's safe to engage in social and economic activity. Over the long term, the only pathway to a sustainable recovery will be the development of an effective vaccine or therapeutics. Now, that's going to be a very long time off. The word from Anthony Fauci and other public health experts is that that's going to take about 12 to 18 months. We can build a bridge to that time of a safe and effective vaccine or effective therapeutics using a regimen of massive testing, thorough contact tracing of those who come into contact with persons testing positive for the disease, and quarantining of sick individuals and those who are at risk of having contracted the disease. We don't have the capability to do that here in the United States, but a number of other countries, particularly in Asia, have demonstrated that with a massive application of these techniques, once the curves have been bent down sufficiently, these can be quite effective in allowing much of activity to resume. Until we either have a safe and effective vaccine or therapeutics or the kind of testing, tracing, and quarantining regime that I mentioned, I think the return to normal activity is going to be quite bumpy. It's going to be halting. There will be occasional flare-ups of the disease regionally, and there are going to be reversals where social distancing have to be reimposed. Fundamental disease characteristics of the virus have not been altered. The hope is that it will be less prevalent, and therefore that we can open up to a limited degree. there are reasons to be hopeful, and I want to leave your questions, reflections. First of all, it is really astonishing if you do any reading about the influenza pandemic of 1918 and 1919. You quickly recognize how in the dark health experts were a century ago. By comparison, just one metric, a full genetic sequence of the virus was published in early January, and that really started the race to develop a vaccine. Secondly, as I mentioned, our economic policy tools are not well suited to a global pandemic, but our basic understanding of what the mechanisms are people has advanced greatly. The policy confusion at the time of the Great Depression contributed greatly to the severity and longevity of that. Fortunately, I think our policymakers are really quite clear today about what needs to be done. Finally, it's not going to be an easy road to recovery. The damage will be severe. I'm sure that many in this community will experience that damage firsthand. Their loved ones will be affected, both health-wise and economically. But there is no question that we will recover. We will bring the disease to submission, and we have the tools to rebuild economically, and there's no doubt in my mind that we will actually succeed in doing that.